a two-part problem with the FHA and the VA buyers, who we do very much want to see back into the buyer pool. I mean, home ownership should be available to every American. I mean, that's just across the board. You wind up having to take a lower down payment. You got higher loan to value ratios, and then you get the two-part problem where you have an appraiser hopping around acting as though they were a home inspector, and a lot of this stuff is really vague, where you don't know what you're going to get as a home seller or an agent representing. I've had houses I thought were going to be flagged left to right. I prepared my clients for it. They made repairs in advance. We braced ourselves to the eventuality of getting smeared on an FHA or a VA loan. No problem. That's it. Walked it right through. In other houses that seemingly didn't have any problems, we have basically like a rogue psychopath hopping around a transaction. Move this, do that. We want a permit for this. Things that weren't even required in the building code, but we couldn't get a loan certified until basically an independent contractor who's coming from out of market working for the VA says, okay, now this person may spend $500,000 on this house. So I'm just curious on the back end. I know you guys don't have contact with appraisers, but it is certainly a part of the banking industry that these guys exist. Do you see that changing at any time, or is this going to just continue to carry on where it's, because at the end it does screw the consumer?
It does.
It really does.
And I think that we do see, at least I see on my side of things that we do see that less and less, because I do think that obviously just like there's low inventory, right? There's less deals going on. That obviously means that appraisers are also
hurting for work.
Yeah. The better ones are the ones that are getting more orders,
yep.
right? Because, and by better, I mean, not that they're appraising everything for what we want it to be,
yeah.
but in a lot of cases,
quicker turnaround.
That is part of it, though, is that if they are appraising properties at or above contract price and they're going through the collateral underwriting system correctly and good, that is a better appraiser than that is coming in under value, thinking that he's protecting the bank, but it's still the same CU score. So, I think that we're seeing really the same way that, unfortunately, a lot of realtors have dropped out of the business and loan officers have dropped out of the business because of how rough it has been for a lot.
It trickles down throughout
the business. Therefore, I do think that a lot of the better appraisers are the ones that are working more and more these days. And I do think that a better appraiser is conscious of the fact that he does move the needle of the economy just as much as we all do, right, in keeping these deals going and being pro-business. But I think that
to be devil's advocate, so here I look at it a little bit differently, where as I see more and more people getting desperate for the work, speaking specifically about the appraisal industry in itself, getting more and more desperate for the work, they're lowering their prices more and more to bid out to the banks, and we're getting a less qualified inspector. I can only speak to my most recent FHA and VA transactions. In all three of them, back to back to back, all three of them in a row, and we're talking in the span of 4 months, we've had massive issues with the condition of properties that, to the eye, to the home inspectors, were no problem. Walk in a park. And then all of a sudden, I guess the guy working for the lowest available bid to the bank, because banks are there to make money.
But listen, and that's a different thing, though, too, is that, not that we're cherry picking appraisers. That's not at all what happens.
Oh, no, not at all.
But it is a different where we don't own the appraisal management company,
correct?
Right?
They're a business too. So if they could get away with paying somebody $150 for the file or $50, they're going to take the guy doing $50.
And unfortunately, a lot of the larger federal depositories, that's not, their niche is not mortgage lending, right?
Correct.
So a lot of times it is to keep the costs down and everything. And it's just a reality that a lot of times when an appraiser works for the management company that is through that larger bank, they are getting paid less. And obviously that is attracting. The same gets paid.
You get what you pay for.
In
you get what you
our
pay for. Any industry.
The management companies we work through, they are paying towards the higher end of what an appraiser can make on those files. And it obviously is going out to better appraisers.
Yep.
More regional, where you're not getting in Middlesex County, for
out
example.
Of market.
You're not getting an appraiser that's coming from Salem County, all the way down in South Jersey. You're getting someone that's local, that knows that area, that is doing 8 other orders probably in that exact area simultaneously. So they're familiar with that market. You know,
Agreed.
that's important because, again, buyers, we don't want buyers getting overinflated appraisals that don't make sense. That's not the point. But you also, it's not helping a consumer when it's under appraising and it shouldn't under appraise.
Sure.
You know,
It puts it back on them. They pick up an added expense. And there's the big misnomer inside of the industry that appraisals are there as a consumer protection. While I do think there's a little bit of truth to that, overwhelmingly, it's a bank protection. It's been dressed up as a consumer's protection because they're the ones that are also picking up the cost of the thing too.
Of course.
So super awesome.
Of
so
course.
they dump it on them twice, but such is banking.